All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market open here and fairly flat here this morning. You start looking at the headlines and the information that's out there and what's coming in. And at some point, you have to realize there's just nothing new. And we see the markets continuing to react as if there's nothing new as well, because they are very flat when it comes to overnight futures. I know if you take a magnifying glass, yes, it's expanded. But, from an overall market standpoint, it's just a very flat, very nondescript type of market. And, we've had 2 days here of bleed lower. We had Monday, which gapped up and bled, but pretty much all week it's been a bleed lower, and you can see what that looks like. It's not exactly earth-shattering and game-changing here as far as market participants are concerned. Now, is there pullback risk? Well, there always is, right? That doesn't go away. In fact, I almost wonder if we don't need a day like this back here in June to bring the buyers in. Right, that the ones that want to be buyers, they're just gonna be patient. Be patient until they get a little pullback, and go and run with it. But but in all, you can see the volumes are falling off. They're getting pretty light, and when we really kind of look at it, it's very similar to what we saw right here in April. Right, where we basically had one up day. The rest were just really flat, nondescript, type of days. Now, what's similar about right now and April? Well, we're in earnings season. There's talk out there that earnings season is going to drive the next leg of the market. I just show you April to kind of maybe temper that a little bit to understand that, if earnings season comes in as expected, it's not going to be a driver. It's not going to be a big driver, in terms of, what happens next, right? We had earnings season last quarter, and we drifted on higher. Then a U.S. President Trump tweet came in. Path of least resistance went the other way, but it was all driven by gaps. And then we get, a quick, fast, hard reversal, and we've kind of been chopping along here in the last month, here since with that. So anyway, that's kind of where the market is. Pretty nondescript, not a whole lot that we can break down. There's stuff we can look at that's bullish. We can look at other stuff that's bearish, but the reality is most of it counterbalances, and there's not one thing that just is overly strong in terms of signaling one way or the other. All right, now for the challenge. We're in one position right now, and it's Target. I made the comment when we entered Target that this is, if you've never traded Target before, it can be absolutely maddening because the stock moves. And it moves, it whipsaws, it chops back and forth, and being in Target during consolidation is even worse, right? When you look at what Target has done since we've entered, stock's barely moved, right? It had a down day the day after we got in, had an up day yesterday, $1.50, down $1 early this morning. But when you compare that historically to how Target moves, it's not really moving all that much. Right, Target is just one of those where the movements they're very strong, and when you're in the trend on Target, really pays off nicely because you can see the options do move, but when you're in chop on Target, it can be a little maddening. Right now, that's kind of where we're at here with Target. Let's take a look at the option value. It's 230 to 234 there, so 232. Let's come fill that in here. So we're down $100 on it. We entered the stock at 87.71, and right now the stock is at 87.76. So stock's gone 5 cents our way. Great. After 3 days with $3,000 in, not exactly where we want to be there with that, but we will be hitting the time stop on it this afternoon. If the option is not trading in the green, we will be hitting the time stop and we'll be knocked out of that. It just kind of continues this trend that we've seen, pretty much since the CSX exit. We had the Verizon, we had Boeing and CSX, come in and we pushed there on the challenge. But since then, it's just been, slogging and grinding around. And it's one thing if we were trading with 3,000 to see these gain-loss numbers. Yeah, that'd be great, right? But having $10,000, $11,000 in cash, or excuse me, $10,000 to $11,000 in play, most days, and seeing these numbers, they're just very muted. Just incredibly muted, but overall we continue to grind to the upside, but definitely a grind over the last several weeks as the market itself is, since the gap up here at the beginning of the month, the market has just been in this kind of grind mode rather than a trend mode overall. So no new signals here on the challenge this morning. Bank of America. We could see this trigger today if the 3.7 crosses. It is in a position to where we could see it trigger. Now, we traded Bank of America right back here. We got in right here, and we were able to take off 40% up here, and then got bounced out on the time stop a little bit later. And since then, the stock's gone nowhere, right? Absolutely nowhere. And we get a crossover here today. We could see an entry signal come in. Me personally, I'd love to get back into Bank of America, but I'm not convinced the market's ready to be big buyers and go after value yet. Right here in this market, people are talking about Netflix and what's Netflix going to do and all of that. I don't think the market's going to look at Netflix as anything major to be a driver. But I do think there was an earnings report that does change investors' minds just a little bit and kind of makes them want to be a little bit more patient. And it's not Bank of America earnings. In fact, Bank of America earnings I think are very solid. I think are comparable to JP Morgan. I think when we talk about the banks, we're still talking about a great value story and a story that has plenty of stock buyback, plenty of investor incentive to be in. And it's just a matter of, okay, is there that next big wave of buying that starts to come into the banks? And that was my opinion on it yesterday. Same opinion here today when it comes to Bank of America earnings. But yesterday we talked about Canadian Pacific and their earnings and growth across all segments, really strong here from the railway. And then we got CSX earnings. There's a big railroad, and that is a huge drop. That is the type of drop where something has changed. This is not a Bank of America type move where, just not a whole lot has changed. But this is something that has changed for the company here with CSX. And I know the stock rallied into the earnings, and so it should have gone up because somebody knew something. No. The problem with CSX is investors didn't know. They didn't know or understand kind of how bad it was. And in fact, you could argue that CSX should have come out with a pre-earnings warning with it. But, the numbers themselves aren't bad enough to suggest that they should have done that. But when you look at what they said and what is on the table there, slowdown in coal and a loss of some of the oil traffic on the rails and just a revenue downgrade for the quarters to come. It is not a pretty picture here for CSX in any way, shape, or form, and it's one that investors are being forced out of, and rightfully so. And, what do we tend to see on these types of moves? We tend to see what? You get the gap down, right? And then you're going to get some chop. Then you're going to get a bleed to a little bit new low, right? And then before the next earnings report, the stock's going to come back to where it was after the last earnings report. Right, and so that's what I would expect to see from CSX, where it'll come back to here, and investors will look at next quarter as a show me quarter. If they kind of show that this quarter was a one-off, investors will take it back up to these highs. if they go up, we're going to repeat similar process. The stock will be back in the 50s, and could be back in the 50s relatively quickly if they don't turn things around there. With it, or there's not some sort of economic element to turn it around. So that's what I'm expecting here from CSX. That's the norm that we see. When there is a big down on earnings, we saw that with CSX back here in October. Right? Big down on earnings, a little snapback after, and then bleed to a new low. But then this kind of rebound right on back to where it was. Now, market conditions, drove it on down, and the stock wasn't able to get quite back up to where it had been after earnings in October. But I do expect something of this nature to play out, albeit to a slightly smaller magnitude there. When it comes to CSX, if we come in and we look at something like the valuations on it, right, which I think is going to be a big deal when it comes to stocks that get crushed, right? Because when you look at the market, value investors have a really hard time. Right, it's not a market full of great valuations, and so one of the things I think we're going to see this earnings season is the stocks that get crushed. That we will see investors looking at them and saying, "All right, it was finally crushed. Is there a valuation here that's compelling?" Right, and when it comes to CSX, there's just not. Right? Even with this crush, we're not talking about a PE ratio that's compelling. We're not talking about a price-to-book ratio that's super compelling. If we go to price-to-sales, right? All these are different ways that, investors will measure stocks, right? But we look at a price-to-sales standpoint, it's high relative to its history. So we're not looking at CSX and going, well, this is a great value. Dividend yield is another way that that investors will look at something to go, okay, is there good value here? It's 1.3% after today's move, right? So you don't have a great PE ratio, you don't have a great price to book, you don't have a compelling price to sales, you don't have a great dividend yield, and so to keep the stock going up, you need the revenue growth. Right, and that's what has driven CSX over the last while. Revenue growth. In fact, you can see it right here what the revenue growth has looked like, and that has driven CSX here 2017, 2018, 2019, and now what they're basically saying is our revenues are contracting going forward. So, that's definitely not something to where I think we're going to see investors eager to want to jump in and eager to chase in. Why I do think the 50s are a potential here for CSX should things, not fall, perfectly there for them. And you just look at Canadian Pacific and you look at CSX's earnings, right? You're an investor. You need to get money into the rails. Who you buying? It's a no-brainer who you're buying. You're buying Canadian Pacific, and you're letting CSX, chill out for 6, 9, 12 months before you really go back and reevaluate it in a big way. Okay. Alrighty. That's what I want to share here with you this morning. Again, Bank of America could trigger to the upside here today. FCX could trigger to the downside today. We talked about this one yesterday as possible upside trigger. It never materialized. Now it's getting that downside 3-7 crossover action coming into it. And the consolidation risk is a little too high right here. But this could easily be a trigger here by the end of the day. So we'll see, how that plays out here going forward. But those are the two closest potentials, FCX and Bank of America. Thanks for hopping on. Have yourselves a fantastic day. I'll be back here this afternoon, and we'll talk to you then. Take care.